beard has grown.
Yeah, this is what happens when you can't go to the barber.
I live in Sweden.
Okay.
On the countryside in a little town. Originally, I'm Norwegian from northern Norway.
Okay.
Yeah, but I have been living in Sweden most of my life, so I'm half and half.
So Viking FX, that's your handle, huh? Is that reflective of your trading style at all? Do you get in there and
I just slaughter the market.
Yes, slaughter the market, start hacking and slashing away and getting those pips?
Yeah, pretty much.
You're funded. You've gone through Beeline, right?
Yeah.
Take me through that journey real fast, if you don't mind. Like how did you hear about us, and what were your thoughts going through the journey on your way to get funded? Have you ever traded before? If you don't mind, just kind of give me an overview of the journey to today, I guess.
The ongoing theme all the way to now is my emotions. That is why I'm actually calling you. And I did so several times, and I always made some profits, and then I got too confident, so I just put on some bad trades and didn't understand the leverage, and I didn't understand the risk control and risk management, so I would always crash land.
So tell me, what are you currently trading in? What level are you currently at right now?
What do you mean level?
Funded. You're funded. Are you funded level 1, 2, 3?
I have this gold 3. It's like the pre-fund. No, gold 3 is 1,000.
Okay, so you're still in pre-fund, trying to get out of pre-fund, and you probably, if I can be presumptuous, most people struggle in pre-fund with average wins versus their average losses. Is that right?
Yeah, of course, because I am doing my version of wobbling. And,
okay.
And you have many small wins and those rather annoying big losses in between.
Yeah. No, I get that. And I guess what a great opportunity it is this week to kind of talk about that, because last week wobbling was awesome. This week wobbling hasn't been so great when you don't get any volatility, right? It's always in one direction or another. And so if you recognize that, you can kind of switch up your style. And so there's not one style that's best suited for all market conditions, right? And so if you're not comfortable, and when I say you, I mean anybody, if anybody is not comfortable with multiple trading styles, then they probably shouldn't trade in market conditions that aren't conducive to their strategy. Does that make sense? And so the first key is to identify what market condition is conducive to your strategy, right? And if you can recognize that, hey, this market is my market, right? And it's if it's my strategy or my style of trading, then go ahead and trade in it. But if you approach the market, open it up and like, I'm not, it doesn't really fit, and I'm kind of struggling. The market and I really aren't communicating today. Well, that's probably not the style of trading that's conducive for your technique, right? And so if you either A, shift your technique, or B, get out of the markets. And as new traders, I tend to recommend just step back. It's okay. There's always, the market will shift in an hour or 2 hours or even tomorrow, right? But we all have those days where the market doesn't communicate with us. And so sometimes you just need to know when to recognize it, know when to put your hands down and say, I'm not going to trade this market. So that being said, what I'd like to do is it's your call, whether or not you want to trade on my account or we trade on your account. And what would you like to do? Would you like to get in and trade on your account, and help your statistics, or see if we can, or hopefully not hurt them? Or you want to trade on my account and kind of play it safe that way and just see what we do? It's totally up to you, your call. I'll let you feel what you're most comfortable with.
I think trading my account would be more real.
Okay.
Then my emotions would be
a little you'd be a little bit more invested into it.
Yeah.
And so there's two trains of thoughts, right? One is the more times that you expose yourself to the market, the more opportunity you have something that goes wrong, right? But as you're learning, you need to have all those learning experiences, right? And so if something goes wrong, you need to have those learning experiences. Where somebody like myself or somebody that has a little bit more of those experiences could help you is quickly to identify what you do if, right? What do I do if and this happens? And so that's kind of what I hope to, at the end of this session, we get a couple of those what do you do ifs, right?
Yeah.
And so there's two trains of thoughts, like I was saying. One, for me, I tend to not trade more than an hour per day because I don't like to expose myself to multiple market conditions. So I find if the condition is conducive to my trading style. If yes, I'll go ahead and jump in and trade. I love getting hitting my targets, and as quickly as possible, then I'm done for the day. However, when I was learning and when I was going through Beeline, I was trading all the time, right? I was trade. And I encountered a lot of those problems, right? And I didn't know what to do, or I didn't know how to overcome them. And so I had to go and ask for help. And I had to go and ask, hey, Sean, what do you do if? Hey, Todd, what do you do if, right? And so I learned the exact same way that you guys or that everybody in Apiary Fund learns, right? I went through Beeline, all that kind of stuff. And so now I'm in a position where I hope to be able to give back, right? And so all that is just basically me saying that it's good to stay in the market, but if you're in a pre-fund account, I would probably trade your pre-fund account when the market is right. And if you want those experiences and continue to trade and learn different techniques, do it in a not funded account or a not pre-fund account. Do it in a simulation account. Does that make sense?
I use that a lot. I have like 4 or 5 accounts that I can
bounce it in and out of.
Yeah.
Okay. So let me see here. So let me just kind of take the drive and let's kind of see what the market is doing right now.
This is not the way yours look like. Way too much indicators and pivot points and.
Yeah. So I never tell anybody, hey, your style of trading is your style of trading, right? I'm not trying to force you into my style of trading, right? For me, I don't use indicators because I trade on the 1 minute chart. And for me, the 1 minute chart moves faster than an indicator could tell you. Usually indicators tell you what happened in the market. And on the 1 minute chart, it's happening at the moment, right?
Yeah, I used what's happening in the moment, the last candle, in conjunction with my indicators, and for me it works.
Sure. And that's the key right there, is that if you do find something that works, why are you trying to change it up, right?
Yeah.
And so that's kind of why I like to assess and see what style. Now I don't trade with all this. I like to have a clean chart. I like to look, but that doesn't mean that it's wrong. If you need these, then it helps you to become a better trader. Great. The only thing I would be cognizant about is when you use those quadrant lines and it tells you where support and resistance are. Well, as you wobble, you need to know where all your minor support and resistance are and your major support and resistance are. So I think that's the first thing that we're going to do here before we even start placing trades is can you identify where the decision points are in the market, right? And if I'm going to ask you to do that real fast. So take this tool and we're going to make sure the continuous chart object is on. Yep, you got that? Okay, great. Take this tool and then mark all the decision points from bottom to top or top to bottom, whatever, on this chart, on the 1 minute chart. Where would you say are the decision points, minor and major decision points currently in the market right now?
Yeah, you have this one.
Okay, go ahead and click on it on where you think it is.
And you have this one.
Okay.
And you have a minor there and a minor there. Okay. But you also have this one. And let me see. Yeah, pretty much.
All right.
So it's like this one and that one. That's the what do you call it? Time? No, price.
Your pivot is your major pivot points, right?
Yeah.
Or your major support and resistance.
Yeah, but of course here you have it's where the price is now.
Mm-hmm.
And
so why did you draw this one right here? Why did you draw that one? Switch it, this guy, right?
Because it's a minor pivot.
Yeah, but why'd you place it there? Just curious.
No, just the orange square, or what do you call it, diamond?
Sure. So, and that's what I thought.
Mm-hmm.
And so one of the things I want to point out to you is that it's not, even though it's not on the diamond itself, it's actually on the body of the top of the body, right?
Yeah.
Not the wick. So it's kind of a little bit of a lag. So I put that there.
Mm-hmm.
And we have just crossed it, but now we're trying to test that again. You see how it's coming down and trying to test that.
Yeah.
So it's really the bodies, and I want to make sure that that's the point that we get across is it's the bodies it has to cross in order for it to have a true breakthrough. The body actually has to hold. So right now it just broke through that minor, right? It broke through the minor. But if it comes back in a wick formation, it didn't technically break through. And so we have 3 seconds to know if it'll break through or not. And it looks like it did. Do you see that?
Yeah.
And so it broke through. Now it's coming down and testing this one as well, right? So that's the first thing that I kind of do when I get into trading is I look and I see where my support and resistance zones are or my decision zones. The next thing that I do is I look and I see, okay, these wicks are actually moving pretty good, or candles, not wicks, but these candles are moving pretty good. And so you have it set up for 2 pips of take profit, which is great.
Sometimes I use 3 when I see it's moving a lot.
Sure. And so one of the things so right here, I'm going to go ahead and jump in on a buy. Why would I jump in on a buy right
there? To me, it doesn't make sense because my indicator says sell.
Okay.
But sometimes you talk about the abnormal candle size.
Okay.
But that's not it. You have this price range, and I guess, you see this range here.
Let's go ahead.
There.
Draw on it with I can't see you have to click on it before there we go. Now what?
Here, you have this range here.
Mm-hmm.
So, and you have this here. It's kind of same range.
Mm-hmm.
And same, this one is a little longer.
Sure.
Yeah, and now it's kind of, it's that range now, so it should go up.
Yeah. Now the thing is,
I have a language problem sometimes when it comes to technical talking.
Oh, you're fine. So if we look at the 5-minute chart and we look at the history, we've had a huge upswing, right? I mean, it's been going up pretty much all night long. But if we pull back, we're at the peak. We're kind of at that peak of that up, right? We're at the very top of that up. And so if we could say that we could see it start to decline or decrease, right? But also in the last little bit, we've been kind of in this up and down mode, right? So you can kind of see that on the 1-minute chart. Goes up, goes down, goes up, goes down, we're in that down phase. And so I like to be on the bottom of that down because it'll start to turn up. Now, one thing I can't really see very good is, I guess these blue lines are your take profit, right?
Yes.
Okay. So I'm trying to read, gives your charts a little, has a lot on your chart.
You can, if you want to, we can have a clean.
Well, I want to make sure, but I do want to make sure that you understand within the confines of your trading, right? And so it's important for me that if you're going to continue to use these indicators, how do you apply these indicators and be able to have good trading statistics, I guess you might say. Do you know what I mean? Or what happens if? That's kind of the title of maybe of this episode is what happens if.
Yeah.
You know. And so as we got into some trades right here, it started to come down. And so we know that if it continues to come down and it breaks this zone right here, there's a good chance that it could follow all the way through and have this and retrace on this shot up, right?
Yeah.
However, we also look at the 5-minute. If it does retrace, which it could, are we in jeopardy of breaking that uptrend? And I'd probably say no. I'd say if it does retrace, we'll do this guy right here. If it does retrace down to this, I'd still say down to this area right here.
Is it possible for me to move the window with your face?
Yeah. Go ahead and move that. You can even minimize that and get rid of it.
Yep. Okay, like this we can do.
Yeah, you don't need to see me.
I've seen you enough.
Yeah.
Oh, I have so many hours watching you. So.
So it comes down to this area. If it even comes down into this area, we're still considered to be in that upward trend, right?
Yeah.
So if you take this right here, so we want to be cognizant of that. Yeah. So that's one point that the market is going to cross. So it's probably for the market, it's probably saying, hey, I'm safe, or I don't have to make a hard decision if I follow that trend line, right? And so if it comes down to this zone, I'd still be buying because we're looking for that little push up, right? If it breaks this, in particular, if it crosses this line right here, so I'll put on here. If it crosses this line, then we're in a selling bias. Does that make sense?
Yeah.
We kind of shift our bias to a selling. Why is that?
Because you have no support.
Well, it's crossed. You got two crossing points. One, it's crossed that trend, right? And two, it's kind of crossed that major support line. And so we could see it retrace all the way down to about this area.
Yeah.
So if we're in buys up here and it does that, then we want to make sure that we get out before it breaks down all the way lower, right? Yeah. And so the reason why I got into buys right here is because we were up against the zone right here. And the market goes up, down, and I'm looking at price action. So we're moving, right now we just moved 12 pips. But here we move 6. Here we move 6, I'll call it 6. Here we move 10. And here we move 12. So we're running between a 6 and 12, but we're asking the market to only give us 2, right?
Yeah, yeah.
So I still feel comfortable to be buying all the way down to this this trend line right here, right? And we're right on it. And so if it crosses over, then we're probably going to be shifting our bias to the short side, okay? Now again, if it crosses over on a body, not a wick, and so if it crosses this line, we're probably going to go all the way down to that area, right?
Yeah.
So we put a few trades on, which is.
You want me to take away all the indicators and so you see better?
Maybe we'll just do this. I'll just open up a new chart real fast. So we're up against this. And so now I'm kind of trading this volatility play right here. You know what I mean? So as it goes up to the top, I'm shorting it. As it comes down to the bottom, I'm buying it, right? And so this is very conducive for a wobble technique, right? As we're getting volatility in the market. Now, what's kind of also good is that we're getting volatility runs of 6 to 10 pips, right? And so I love this magneto tool on my cell. And so I will pull these magneto tool all together and I'll put it in a place where I think the market is easy to hit. And so I put it right on the top of that that zone. Does that make sense? Or that's that decision point. But I make sure that my take profit doesn't have to make a decision in order for it to take my in order for it to take my profit, it has to just test if it's going to make a decision.
Yeah.
And so that's a better point for it, right?
Mm.
And I will come down and say, okay, now instead of making 2 pips, we just made, 3, 4 pips, right?
Yeah.
And if it gets another pullback just on this candle or the next candle, I'll go ahead and sell some more. But if it's going to continue to run, I'll let it go all the way back down, and then I'll flip it to a buy.
You will not chase that one.
I'm not going to chase it because I don't expect it to go all the way up, all the way down, right? I mean, rarely does in a V, but there we go. There's a little bit of a pullback. So you can get your 2 pips inside of that wick, right?
Mm. Yeah, I've seen that the market does that quite often.
But it rarely ever trades in a V, right? It doesn't go straight up and straight down, right?
No.
And so I don't usually trade the rarely evers. I usually try to find what's the higher probability, right?
Yeah.
And if I would have chased that, I probably wouldn't have been taking those profits right now, right? Because we would have gotten in at a different point. And the other thing too is on that stall, when it stalls, I go ahead and get out as well. And I would
I've seen that in one of your videos. If it stalls, you'd rather take 1.8 than losing.
Yeah, exactly. So if it just gives me a little bit, I'll go ahead and take that guy out too. But when it just shot back up, so we'll just rinse, repeat, and get into a few more, right?
Yeah.
In fact, I'll go ahead and kind of load up here because I love the position where that 2 pips are, where those 2 pips are.
This is what I'm good at too. In the beginning, I just ace the market, but then I get overconfident and I do some stupid trades.
Do you know when you say to yourself, okay, do you know where it is that you kind of tend to break, where it breaks down, right?
Yeah. I don't know. No, I don't.
So when you say stupid though, like what happens?
I get sloppy.
Okay. So you don't start reading the market.
No, I just say, okay, it's going down again. I just put on some, and then I say, oh, it went the other way, and maybe I do some hedging, and then it's all messed up. And
it's all messed up.
Yeah, and I can sit up all night and just watch it because I have big problems taking losers.
So that's where you need to become more methodical in your taking loss approach.
Yeah.
Like I still think I'm well within profit. Like I think these trades are still in profit zones because it's been going up and down. However, it doesn't go up and down forever, right? The market's not going to go sideways forever. At some point, it's going to break out to the upside or break to the downside, right? And so you need to prepare, and that's why it's very important for me to never trade with more than a half, because if I do get caught on the wrong side of that breakout, I'm not emotionally connected to taking a little bit of a loss if I've just made my gains. Does that make sense? And so if it does break out, and when I mean by breakout, if it starts trading above here, or comes down and breaks this level, then I'm like, okay, I'm going to go ahead and look to close out of my trades that are in a non-favorable position. Plus, by trading only half, like you just saw, it popped up to here. I went above that half rule. I got into more trades, and I was able to take profits. And so it allows you to take opportunities as opposed to maxing out your – and I think if I could be presumptuous with your trading, because I see this in a lot of people's trading where they get in so heavy, they get stuck. They can't trade anymore because they're either maxed their position size out, or their losses are too big that they're into what I call hope and pray trades, right? I hope and pray that it comes back and hits my take profit, right?
Yeah.
As opposed to, I mean, isn't it such a great feeling when it does hit your take profits, or it does get you out of trades and now you have a clean slate and you can start all over again, right? But during that time frame, you're like, oh, I hope it comes back. It needs to come back, and you're constantly stressing or vexing over those trades. And I'm like, why? Why should we put ourselves in that position what we're constantly stressing about if trades are going to work in our favor? Get out, get that clean slate, start over, get a fresh look, and it's going to be a lot better for you. You know what I mean?
Yeah.
And so here again, we also got, I like to read these candlesticks. And so we got kind of a double top with a M that's going on here. And so we got an M that's going on here. We may start seeing that dip down to the bottom side. And so I read that. And so there's a good chance it might break through here. So if I get a pullback, I'm going to jump into some more trades. So just a little bit of a pullback on this bar, maybe right up into this zone right here. We get it up into that zone, I'm selling. If it doesn't and it goes through and breaks through and runs, I'm okay with that. I don't need to say, oh man, I wish I would have got in on that run, because there's always another one. And so I'd wait for that higher probability to surface as opposed to jumping in and chasing the market.
Yeah.
Is all this making sense to you? And I tend to say that a lot. I need to have another catchphrase or something.
No, it makes a lot of sense.
Apprendez-vous? Yeah. Or how do you say that in Scandinavian? Understand?
Yeah, förstår du det eller?
Okay, I'm not even going to try. Because what I heard you say is first order, yeah?
Yeah. You know the Muppet Show with the Swedish chef?
Oh, yeah.
Yeah, I understand that that's how we sound.
That's how you sound. So you can kind of see right here, even though we have a 2-pip take profit, that's kind of more of a guideline than a rule. You know what I mean? Because I'm always adjusting those take profits to wherever the market is better suited to take them. Right?
Yeah, the magneto.
Mm-hmm. And then as we got into higher momentum, we were taking larger profits. So what would be some of your takeaways or your assessments from this exercise that we just had?
I mean, I put on trades and just hope and pray. No.
No, you're more than that, because I can tell, because you understand it. So that's the first part, right?
Yeah. But I need to be more active, I guess, and to get my emotions in check.
Sure.
Yeah, that is why I called out for help, because that is my main problem. I have no problem seeing entry points, but when it goes against me, that's where I struggle.
And how would this help you that we just did today?
I saw that you were adjusting the take profits much more easier than I would do, and you just, if it doesn't work, you just get a clean slate and start all over before it was too heavy. And because what matters is where we are right now. We are in profit.
Yeah.
At the end of the session.
At the end of the day, right?
Yeah.
And being consistent in doing that.
Yeah.
So if there's one or two things that you're going to adopt and implement into your trading session for today or next week, what do you think those things would be that you could take away from and adopt into your session?
To close out when I see it's not going my way, and to adjust and to take smaller losses than having those bigger ones.
Yeah, don't let those losses turn into bigger ones, right?
Yeah.
Any questions though before we end? Do you have any questions about anything on the session or anything else?
No, I'm pretty satisfied.
So I think we're good. So if you have any other questions, I'll go ahead and end it here and get you that recording as soon as possible. Okay.
Okay. Thank you.
Thank you. And keep me posted, how things go.
Yes, I will.
Shoot me an email on your day, share with me your thoughts, your challenges, so keep me posted on your trading for sure.
Yes, I will do that. And I think sometime this year, or at least next year, I will see you in the boot camp. Or
yeah, for sure.
Goal. Yeah,
that would be awesome if you saw. If you could make it there. So
yeah,
look forward to seeing you then.
Seeing the Viking.
All right. You better bring the Viking.
Yeah.
We'll talk to you later. Thank you.
Yeah. Thank you.
Okay. Go. Bye.